Hello traders, this is your trader's friend. Thank you for joining me today for another video. I'm so glad you can be here. Guys, today I'd like to talk to you about the strategy I use for non-farm payroll. What you have before you is the Euro USD on the 1 minute time frame. I'd like to talk to you about this. I did trade this pair, but I'd also like to talk to you about the Euro JPY, and I did not trade that pair. In the Euro USD, what we had all night prior to non-farm payroll was this small, choppy price action. I actually got stopped out twice during the Asian session and decided not to get back into the market until after non-farm payroll. When I woke up Friday morning, I noticed that price had already began to move in a bullish fashion, and I thought to myself, I bet this is a market trap. At 7:30, price just shot up like 45 pips, and I had this huge pink candle in my face. However, within that same minute, price slammed back down to close below the 50 SMA and the 200 SMA. Now, I did not enter the market at that time because I was scared, number one, and number two, because I didn't want to pay the spread. But I generally enter the market on non-farm payroll about 4 or 5 minutes after the announcement. And you can see here, the reason I took this to the short side is because we had this huge rejection at the top of this candle. We also had price that stayed below this 50 and this 200 SMA. Now I entered on this candle short because you can see here that price was moving in a bullish fashion. However, we got a reversal candle at this 200 SMA. I went ahead and entered this market with the thought, though, that if price had gone back above that 50 SMA, then I was out of that trade. But price bled down beautifully, and it bled so far so fast. I had so much money so quickly, I went ahead and took it off the table. Got back in the market, got excited again, and took my money off the table. Sometimes I'm just a big baby guy. So you can see I didn't practice my in on the 50, out on the 50 strategy. And I want to say, just because this strategy worked out this time doesn't mean that it's going to work out next non-farm payroll. That's why you have to have different strategies in your playbook. Also, something I noticed, I want to point this out to you because I think it's very important. But you can see after we got in this small trading range, price all of a sudden began to run to the downside. Now, if you're in a situation where after you have a big surge in price or a big drop in price, all of a sudden price just begins to run, a lot of times it's a trap, which is what this ended up being. Now, I thought I was out of that market. However, I got excited again, and I was looking to reshort this market simply because we had this nice distance between the 200 SMA and the 50 SMA, and also because price was already moving in a bearish fashion on the 4-hour time frame, and this is the Euro USD 4-hour. You can see that strong, beautiful close below that 50 SMA. This is a choppy price action I was talking about, and price continued on in a bearish fashion beautifully. Now, this is the Euro JPY on the 1 minute time frame. And you can see we had that same candle trap before price just dropped straight through to hell. Now, if you decided to go short on this market, then the in on the 50, out on the 50 was a beautiful strategy. Now, if you were like me and you got too excited and could not wait for the out on the 50, that's perfectly fine. But if there's anything I want you to adhere to in your trading is this. If price begins to go against you and you get a close above that 50 SMA and you find yourself on the wrong side of the trade, go ahead and get out of the market. Please don't let the market eat in your pocket all day long. And this is why I'm showing you this particular pair, because if you obeyed the rules, in on the 50, out on the 50, you can see you ended up with a pretty nice profit. But once price closed above that 50 SMA, you can see the strong close here. Price continued to go against whoever was trapped at the bottom more than 100 pips. If you see that you're on the wrong side of the trade and you have the opportunity, once you see that price is going the opposite direction, go ahead and follow the market profit. Always follow the market. Never precede price in the market. But once you see that price is going against you, go ahead and cut that trade and follow profit, because had you done that, you would have found yourself in more than 100 plus pips worth of profit. Now this is a Euro JPY on the 1 hour time frame, and you can see we had this beautiful bearish run below all of your SMAs. The reason I wanted you to look at this particular pair is because this is the non-farm payroll candle. This is the following candle. However, once you got that strong close above that 50 SMA, look at what happened to price. You had this strong run up, and whoever was down here at the bottom ended up trapped if they did not free themselves. Guys, you can absolutely do this. You can be successful at Forex. If there's anything that I did not make clear in this video, please email me. You know that I have no secrets. Have a super terrific weekend. And yes, you can be successful at Forex.